So it finally happened. For the first time since the year 2000, mortgage interest rates have hit 8%. And on top of that, home prices in Northern Virginia are at all-time highs. The best of the best homes are still getting multiple offers, and housing affordability is so bad right now that Zillow says it'll take you 13 and a half years to break even on your purchase. So this is definitely not a sustainable scenario, and something has to give. So is this the end of the housing market as we know it? Well, in this week's video, I'll share with you how 8% mortgage interest rates affect your purchasing power, and then we'll dive into if right now is the absolute worst time to buy a home. So sit back, relax, because we're getting started right now. Hey everybody, it's David, your favorite realtor, and welcome back to another video. So this time last year, I predicted that the fourth quarter of this year, mortgage interest rates would be in that 5.5% to 6% range. Well, I was definitely wrong with that prediction as we hit 8% last week for the first time since the year 2000. I always knew 8% was on the table, but I definitely didn't see it happening. Now, the average mortgage interest rate has dropped below 8% the past few days. However, depending on what lender you're working with and what your qualifications are, a lot of consumers are still getting quoted 8%. So how do rates affect affordability? Short answer is it has a huge impact on your home purchasing power. So between 2010 and 2019, there wasn't a lot of volatility with mortgage interest rates. They stayed in that 3.5% to 5% range. However, in the past 20 months, we've seen some of the fastest increases in history, just as recently as January of last year, where the average rate was about 3.25. Now, October of 2023, rates have more than doubled at almost 8%. So we're gonna jump on a fancy mortgage calculator and we're gonna look at some comparisons with a 3.25% interest rate, which is very common just back in 2021, and an 8% interest rate, which a lot of consumers are getting quoted right now. And for this scenario, we're gonna do the average sales price of a home here in Northern Virginia, which is about $740,000. We're gonna look at the difference in monthly mortgage payment and the difference with the interest paid over the life of the loan, and these numbers are gonna absolutely shock you. So like I mentioned earlier, for this scenario, we're gonna use $740,000 because that's the average price here in Northern Virginia. Most people put 10% down on average, so we'll use that number. Property taxes on that property probably be like $550 a month. Homeowners insurance, $100 a month. PMI, $100 a month. And HOA fees, $100 a month. Obviously, those numbers can fluctuate, but for this example, we'll leave those numbers in. And we're gonna use the interest rate that was very common back in 2021 of 3.25%. So in this scenario, your monthly mortgage payment will be $3,748. Now, we'll leave everything the same, but we're just gonna change it to an 8% interest rate. And now your monthly mortgage payment is almost $2,000 more per month at $5,736. Now we're gonna look at the interest paid over the life of the loan, and this number is gonna blow your mind. So right here at the 3.25% interest rate, the total interest you would pay over 30 years is $377,000. You can see the total cost of the loan is a little over $1 million. Now, we're gonna leave everything the same, and we're gonna change it to 8%. Now let's look at this. You're gonna be paying almost $1.1 million in interest in the life of the loan. That is over $700,000 more compared to when rates are 3.25%. And look at the total cost of the loan, $1.76 million. These numbers are absolutely mind-blowing. So that right there shows you how much of an impact higher interest rates have on your home purchasing power. In just less than 2 years, for the exact same sales price house, you'll be paying $2,000 more a month on your monthly mortgage payment and over $700,000 more in interest paid over the life of the loan. So how much you need to earn to comfortably afford the average sales price home here in Northern Virginia? Well, most financial experts, they recommend not spending more than 28% of your gross household income on your monthly mortgage payment. So $5,700 can be 28% of $20,235. Multiply that by 12. You need to have a household income of $244,000 per year just to comfortably afford the average sales price home here in Northern Virginia. Now, I don't know what the average household income is here in Northern Virginia, but I can tell you it's definitely not $244,000. So that right there tells me that the average household cannot comfortably afford the average sales price home here in Northern Virginia. Now I'm gonna share with you another scenario. So let's say you wanna have a monthly mortgage payment of $4,000 a month, and we're all gonna use principal and interest for this scenario. So back in January of 2021, when rates were at 2.76%, that $4,000 a month would have bought you a $1,085,000 house. Fast forward to February of 2022, when rates were just above 4%, that same $4,000 a month would buy you a $925,000 house. Fast forward just a few months ahead to May of 2022, when rates were 5.5%, that would buy you a $780,000 house. Fast forward to September of 2022, when rates were 6.5%, that would buy you a $700,000 house. Fast forward to October of 2023, when rates have hit 8%, that same $4,000 a month will buy you a $605,000 house. And I'll tell you this for sure, there's a huge difference between a $1,085,000 house compared to a $605,000 house. That's literally the difference between a 4,000 square foot single family home or a 1,500 square foot townhouse that's probably built in the 80s. So as you can see, mortgage interest rates have just crippled affordability here in Northern Virginia. So is right now the worst time to buy a home? Now, if we compare it to the past, yes it is. However, looking at recent history, every year had an argument to be the worst possible time to buy a home. Let's go back to 2020. That's when the pandemic and the lockdown started. There was a lot of fear and uncertainty in the housing market, and a lot of buyers at that time were canceling their contracts because a lot of people assumed because of the lockdowns, home values would drop 10, 15, 25, even 50%. But now looking back, 2020 was a great time to buy because that is before home values shot up by 40%. Then let's go to 2021. That's when this crazy real estate market really started. That's when homes started getting 5, 10, 15 offers, selling for $25, $50, $100,000 above asking price became the norm. Now at that time, I personally thought it was the worst time to buy. I could not imagine spending $100,000 above asking price. I thought everybody was overpaying. However, looking back, home values have only gone up since then, and the majority of buyers in 2021 had 3% rates. And let's go to last year. Fourth quarter of last year, rates were about 6.5%, 7%, which was more than double what they were earlier in the year. And a lot of people thought it was a very bad time to buy because of how high the interest rates were. However, now we have 8% rates and home values have still gone up. Not a lot, they've gone up about 3%. Also, this time last year, most homes were not selling the first weekend with multiple offers. So it was a great opportunity for buyers to get great deals in terms of being able to negotiate off the sales price, getting sellers to pay some of your closing costs. So really, looking back, this time last year was a pretty good time to buy. So yes, buying a house right now is definitely not ideal, especially compared to recent history. And we can't compare it to the future because we have no idea what is gonna happen. So if you're not sure if you should buy a home now or wait, use this formula right here. Well, I tell this to everybody and I go by this rule as well. Regardless of what's going on with interest rates or home prices, you have to check all three of these boxes before even considering thinking about buying a home. First box is you're in a strong financial position. You can comfortably afford the down payment, comfortably afford the monthly mortgage payment. Because the last thing you want to be is house poor, and that's where the majority of your gross income is going towards your monthly mortgage payment. It's a very stressful scenario to be in. Second box you want to check is you have a strong need for a house. Let's say you live in a 2-bedroom condo, but you got a family of 5. Well, guess what? You need a bigger house. Or you're relocating to Northern Virginia or another part of the country. Well, guess what? You need a house. The third box you want to check is you plan to hold this home long term, ideally 7+ years. Because if you bought a home today and look to sell 1 year from now, chances are you will lose in that scenario because there's a lot of fees and taxes associated with selling a house. So the longer you hold a home, the higher probability you have to build appreciation, the higher probability that you will turn a profit when you do sell that house. And like I said, I personally go by this rule as well. I would love to get a bigger house. I have a growing family and would love some more space. So right now, I only personally check 2 of the 3 boxes. I am in a good financial position to comfortably afford the mortgage payment and the down payment. And if I was to buy another home, I know for a fact I will keep it long term. But the box that I do not check is I don't need a bigger house. I'd love to have an extra bedroom, an extra 500 square feet. But in order for me to get that, I have to spend an extra $2,000, $3,000, even $4,000 more per month. It is not worth it for that extra 500 square feet. So guess what? I am sitting my butt right here in my current house, and I'm definitely not a buyer in today's market. So is this the end of the housing market? Absolutely not. Closings and new pending sales happen every single day. Even during the Great Recession of 2008, 2009, homes are still selling on a daily basis. Now, what we hope for is that there's more relief, more inventory to hit the market, lower interest rates, and really just bring down that affordability so that way the average person can buy the average sales price home here in Northern Virginia. And if you want to learn more about living right here in Northern Virginia, check out these videos right here. They're gonna be great resources for you. And I'll see you on the next video.